All right, guys. So the pattern that we're going to be looking at in this video is that of the bullish flag. The bullish flag essentially occurs when there is a strong bullish move. And if we go ahead and take some trend lines to this consolidation period right here, we'll see that they are parallel and pointing into the downward direction. Notice this would be the flagpole, and here is the flag. So this would actually be a bullish flag pattern. Now, the bullish flag pattern is a type of continuation pattern where we're looking for a move to the upside. So how can we go ahead and identify an entry? Well, if we zoom in a bit on this consolidation period right here, one of the best ways to actually go ahead and play this pattern is to turn on your magnet tool, pull out the Fibonacci retracement tool, go from the relative high to the relative low of the pattern, and enter with a break above the 0.707 level. More specifically, you want to see a candlestick close over the 0.707 level. And if there's to be a candlestick close over the 0.707 level, you can go ahead and take an entry point there. Now for the price targets, I like to use two price targets whenever I'm playing the bullish flag pattern, and those are going to be at the 1.414 and 1.618 levels. Notice here, we did see a nice move to this 1.414 level, and following that, we did see the next resistance occur at the 1.618 level. These are some pretty reliable price targets. If you would like a price target before that, the 1 level makes for a very strong price target as well. But for leaving runners, 1.414 and the 1.618 level are extremely strong price targets. Now, for a stop loss, where I would recommend setting the stop loss is with a move below the 0 level. Then that just means if the low of the pattern is broken, then you're going to go ahead and stop out of the position. And it's just a hard stop at this level right here, meaning if you just get a simple move in price beneath the level, then you would go ahead and stop out of the position. But yes, this is the bullish flag pattern. Just to quickly recap it, you have a strong bullish move, followed by consolidation that takes on the form of a flag-like shape, where you have two parallel trend lines. Sometimes they may be converging, but you have two trend lines that are parallel and pointing into the downward direction, and you're waiting for that break and close above the 0.707 level, playing that to the 1.414, 1.618, with a stop loss at the pattern low. All right, let's go ahead and take a look at this example here. Notice we have that strong bullish move right here, followed by a bit of consolidation. Now, if I go ahead and just draw out some trend lines, and remember these trend lines are here just to act as guides to help you understand what you're seeing and better assist you visually in identifying the pattern. If I go ahead and draw out these trend lines right here, you'll notice that we have that bullish move followed by a consolidation period where we have two parallel trend lines that point into the downward direction. Now, same thing goes here. To look for an entry point, go ahead and identify it using your Fibonacci retracement tool, going from the high of the pattern to the low of the pattern. And once you get that candlestick close above the 0.707 level, then you're going to go ahead and enter there with a price target at the 1.414 and 1.618 level, all while setting a stop loss at the pattern low. Notice this was once again a nice little move, a very clean move after the breakout of the 0.707 level, and it is imperative that you wait for that confirmation with the candlestick breaking close above the 0.707 level, because if you do not wait for this, then it might actually further consolidate and actually be developing the flag-like pattern more. Notice if you were trying to play, like if you thought this was the bullish flag pattern right here, and you try to take an entry without waiting for that candlestick close over the 0.707 of this move, you would not have actually confirmed, and we do not see that continuation further upward. We actually see a further development of the pattern before it does close above the 0.707 level, which confirms the entry, and you play that to the 1.414 and 1.618 level, all while setting a stop loss below the pattern low. All right, so now that we looked at the bullish flag pattern, let's look at its bearish counterpart, and that would be the bearish flag. This time you have a strong bearish impulsive move followed by consolidation. And if we take some trend lines to this consolidation here, you'll see that this time they are parallel lines that are pointing into the upward direction. So you have kind of that strong bearish move that makes the flagpole, and then you have that flag-like consolidation that points into the upward direction with two parallel trend lines. Once again, these trend lines can be converging, but most of the time they will be pretty parallel. Now, to identify an entry here, it is a very similar tactic. You're going to go ahead and go from the pattern low to the pattern high with the Fibonacci retracement tool. And once you get that candlestick closed beneath the 0.707 level, that's where you would go ahead and establish your entry, set your stop loss at the pattern high. And this time you are playing once again to the 1.414 and 1.618. So essentially you're playing the bearish flag the same way that you would play the bullish flag, just inverted. This time when you're pulling out the retracement tool, you are going from low to high, entering with the candlestick close beneath the 0.707 level, and playing that to the 1.414 and 1.618, all while setting a stop loss at the pattern high. All right, let's take a look at another example of a bearish flag here. If I go ahead and just draw out the trend lines right here that mark this consolidation, you'll notice that once again, they are parallel trend lines that are pointing into the upward direction that follow a bearish move. You'll also notice that these different bull flag and bear flags that I'm showing you guys are happening on different time frames. And that's just to show you guys that this does occur on all different time frames, and it does occur on all price charts. It's not limited to just futures, stocks. You'll even see them in something like cryptocurrency or even in commodities. That's the beautiful thing about technical analysis, is that it does carry over to other markets. But anyway, let's go ahead and take a look at how you would identify the entry here. This time, remember, you're going from the relative low to the relative high of the pattern using the Fibonacci retracement tool, waiting for that candlestick close beneath the 0.707 level. Once you get that candlestick close beneath the 0.707 level, go ahead and take an entry to the downside there, whether that be shorting the stock or playing puts, and you're going to ride that to the 1.414 and 1.618 level. This one did actually see a surpass of that move before we actually do see another bearish flag being formed here. If I go ahead and just draw out the trend lines here, you'll notice that once again, we do see another bearish flag pattern where you have the strong bearish impulsive move followed by consolidation, where you typically see those two parallel trend lines that are pointing in the up direction. If you were looking to play this pattern, of course, just go from relative low to relative high. And notice once you get that break beneath the 0.707 level, candlestick closes there. Go ahead and ride that to the 1.414 and 1.618 level, where you would be taking profits, all while setting that stop loss at the 0 level. If you look here, we even see another bullish flag that occurred here. Let me just actually remove these drawings so it's a bit easier to see. You get the bullish flag pattern here. Notice if I draw the trend lines, this time they are a bit converging, but like I said, they can be converging. They're just most of the time parallel with each other. But we have this strong bullish impulsive move followed by consolidation right here. If I go ahead and just draw out the Fibonacci retracement tool, going from relative high to relative low, you'll notice that we get the candlestick close over the 0.707 level. Another bullish flag is actually taking place here before we see that move to the 1.414 and 1.618 levels of retracement. So that was just a bunch of different bearish and bullish flag patterns that actually happened consecutively. We had that bearish flag over here, and then move into a bullish flag. And we actually see another bullish flag right here as well before another further continuation upward. But like I was saying, this does occur across all financial markets. If we look here on Bitcoin 4-hour chart, we see that strong bearish move followed by that consolidation. If I go ahead and just take some trend lines, you'll notice that we are getting those parallel trend lines that are pointing into the upward direction. And this one is no different. Go ahead and go from relative low to the relative high of the pattern. Once you get that candlestick closed beneath the 0.707 level, you're going to go ahead and take an entry with a price target at the 1.414 and 1.618 level of retracement, all while setting a stop loss above the 0 level or the pattern high. Anyway, guys, that is it for the bearish and bullish flag patterns. These are some pretty strong patterns to play, and they do generally result in a continuation to either the upside or downside, depending if it's a bullish or bearish flag, respectively.